Silver is regarded as poor man's gold because it has always been less expensive and more plentiful than its yellow counterpart. The Earth's crust contains roughly 19 times more silver than gold. When both metals were legal tender, it needed 16 to 25 ounces of silver to purchase 1 ounce of gold. This relationship ended when President Nixon withdrew the United States from the Bretton Woods Agreement in 1971, breaking gold's link to the US currency. Silver is more unpredictable than its more valuable relative. It rises quicker in bull markets and falls faster in bad situations. As a result, the gold-to-silver ratio is inversely tied to the general trend in precious metals, peaking at the bottom of precious metal bear markets and bottoming at the top of bull markets. A high gold-to-silver ratio is associated with low silver prices. A low ratio is associated with high silver prices. The ratio reached a new low in the 21st century, 33 ounces of silver to purchase 1 ounce of gold, during silver's remarkable run to $49 per ounce in 2011. Its peak, 112 ounces of silver for 1 ounce of gold, corresponds to silver's slide to $11 per ounce when COVID struck in early 2020. The present ratio of 95.63 indicates that silver is significantly underpriced in comparison to gold. Why should you purchase silver now? Why would anybody want to acquire silver or gold in this inflationary atmosphere, given their inability to rise? Inflation should have caused them to skyrocket. For gold and silver bulls alike, the last 2 years have been incredibly frustrating. The strong dollar is the issue. The US Federal Reserve has made the dollar the only game in town by swiftly hiking interest rates to fight inflation. The present Fed funds rate of 2.50% is predicted to rise as high as 3.25% in the near future. Other wealthy countries are rising interest rates, albeit at a far slower pace. When the US dollar is strong, the price of precious metals falls because it takes fewer of them to purchase the same quantity. The opportunity cost of owning precious metals increases when interest rates rise in the United States. Gold and silver pay no interest, and since both metals have been decreasing, bullion investments have been a double loss. This, we think, is changing. The US dollar is severely overbought and set for a huge decline, whilst silver is underpriced and oversold. We anticipate that the dollar's carry trade will soon reverse. Because of the massive difference in short-term interest rates between the US and almost everyone else, the dollar is one of the best performing inflation bets in town. The Fed's tightening cycle started on March 22, 2022, barely 6 months ago. Since then, the dollar index has increased 11.9%, significantly outperforming inflation even with its current yield of 2.5%, which is predicted to climb to at least 4.00%, if not more, by 2023. Will interest rate convergence result in a silver blessing? The Fed takes everything to its logical conclusion. It has maintained rates too low for far too long and will very certainly keep rates too high for much too long. It will not move to lower interest rates unless something goes wrong. However, the chances are that whatever does break will be recessionary, if not deflationary. We've already seen what occurs when equities and real estate crash. High borrowing prices and soaring interest payments as a result of a probable bond market collapse might drain billions of dollars from the federal government's operational budget. As a result, we don't see the Fed allowing things to go out of hand in the bond market. We think the Fed's excessive tactics will compel it to pause and, depending on the extent of the damage, even reverse direction. This will shrink the large interest rate differential that is supporting the dollar's carry trade. Meanwhile, rising European inflation may eventually push the ECB to act and raise interest rates significantly. A Fed pause paired with ECB tightening may quickly make the dollar carry trade less profitable. As global interest rates converge, we anticipate the dollar to suffer and silver to profit. High interest rates may have aided the dollar while harming silver, but they may also be utilized to lower the cost of the fixed risk bullish position in silver. We make daily videos on events that affect your money and future, so if you enjoyed this one, please think about liking or subscribing. See you all in the next one.